Hey, good afternoon, everyone. It is Friday afternoon, 2 o'clock. Markets are closed here, and we'll take a look at everything that went on. I'm going to start with corn. I've got four screens here pulled up. On the right, we've got the weekly. Here's the 240. Here's the 60-minute. And then over here on the left is the daily chart. Okay, so I want to start with the daily chart because it looks really good. We did end up with a 9 here. We were able to hold the contract lows at 467 3/4. We got as low as 468 today before we found some buying in reverse. Now, this bar, let's start with the good. Okay, this bar is an outside bar. We took out yesterday's low. We took out yesterday's high. The bar fully engulfs yesterday's full body and takes out two prior closes. So that is a bullish engulfing double close key reversal. That's a big deal. Those are good signals to have. And they are typically associated with reversal patterns, right? But you have to have follow through, which means we need to get above 481, and we really need to get up above last week's high at 485. And I'd like to see it up above 489 for sure before we get too excited here. Because when we come back to the weekly chart, this is what I don't like about it, is that it's really not a bar, right? On the weekly chart, we did have a long lower shadow, which is nice, but we were unable to break last week's close, which would have been a piercing pattern. We were unable to break last week's open, which would have been a full reversal. We were unable to do any of those things in the corn market today. So the only thing we can say that's positive on the weekly chart of December corn is that we have a long lower shadow and a double bottom if it holds. So weekly is less bullish than the daily. That's why we're not overwhelmingly excited about it. And you can see the difference in the two charts right here. Now, on a short-term basis, the hourly chart looks fantastic, and the 4-hour chart doesn't look bad either. This thing starts to look a lot different if the 4-hour is able to get above the 4-hour cloud. If price is able to get up above this, and we're back into the daily, that would be a big difference. So to highlight that, let's take a look at soybeans, because soybeans did get some strength today. We've been talking about this. We've been bullish beans. We did have yesterday's close finished a 3 white soldiers formation, where these three bodies, full bodies of these candlesticks are getting bigger. This is now 4 in a row, and we finally took out some resistance, and we did so after reversing from the 61.8 after an impulsive move up. So this is 1 up, 2 down. Now we're in wave 3. We should get all the way up to the August highs, if not even the July highs here on January beans before we run into meaningful resistance. If we're going to run into some, it's probably going to be in this 1375 to 1390 range, which is all these highs right back in here, right? That would make sense that that's some logical chart resistance, but really we're looking higher here. Why are we looking higher? Because I thought exports were terrible. I thought Brazil was going to have a monster crop, and there's just no reason for us to go higher. Well, that all may be true, but that doesn't mean that we're still not tight. And so, and we still don't know the final size of of this year's crops. So there's still plenty of bullish fodder here for these things to work higher. And if South America gets dry, which it is in the north, and it's wet in the south, and you start having acreage shifts to away from corn and soybeans, and you get into production issues, then we're already too tight to have that. So so the case for higher prices definitely exists, and that will spill over into corn in our opinion as well. Now, Kansas City wheat. Here's what's really good about Kansas City wheat is that it didn't die. We were able to hold inside yesterday's trading range. We were able to hold yesterday's low. We were so this divergence is getting bigger, not weaker. And I know it's super annoying to trade divergences like this because they just seem to drag on forever and ever and ever. But the longer they drag on, the more powerful the recoil, which means that all of these highs back here are in jeopardy if and when that short covering event happens. So we are not bearish wheat. I know we're in the minority because nobody can see a reason why it would rally. but we don't think that that's the case. So we want to continue to be opportunistic here, because any damage that wheat does, we can undo it in a real hurry, and if you're ready for it, it can do some magical things. So I do not want to be short wheat here. I do not want to get caught to the short side into this setup. It's one of those situations where you just throw in the towel, and so you exit your positions or short it, even worse, and then as soon as the last person does that, boom, it's up and out of here, and it rips your face off, which is exactly what you don't want to have happen. Because you can see how quickly these things can accelerate, right? Here's the report day, up, down, up, and all of a sudden you're off to the races and you're talking about new highs. Can corn do that? You bet it can. I don't know what the catalyst will be. I have no idea, but if we do break through some of this stuff, then look out above, because it puts some of these other highs back into jeopardy. I have no idea what would cause it to do that. I'm not going to profess to know, but I know technically that is what it's set up to come and challenge, or at least to come challenge these higher levels up here. So a day is not a trend, but they all start at some point in time. So we'll see how we trade next week. All right. With that is a wrap. I know you guys got an email from us yesterday talking about our back-tested system. The tricky thing, I'll talk about that for just a second. The tricky thing about this business that we've learned over time is that trading systems are here to stay. For sure. They're used in every other industry. Agriculture is no different. It's going to continue to use trading systems. But these trading systems really function as on-off switches, or long-short, right? And it's easy to do when you're speculating, because I can just click a button right over here and be in or out of any position at any time. And I can adjust it using futures and options and all kinds of stuff. It's much more difficult when you have a cash position sitting underneath it that's constant, because no matter what you do, you still have that cash position. So what we've done is reprogrammed our algorithm to assume that you're always long cash, and that we just want to find vulnerability points where the risk to the cash position is excessive. And so the backtest results of that are really incredible. They're fun to watch. They're fun to see, and they're not perfect. So but it should be used as a general idea. And we really want to go over those with you. So watch this video, call us, talk to us, schedule a time for us to go through. Because of rules and regulations and everything else, I can't just broadcast them out, and I won't do that, because I've got to make sure everybody understands that it's just a back test. It's not we're not out claiming that that it's been used. But the concept behind it, I think, is the most powerful thing that we've ever put together. It's so compelling that that I think I think everybody's just going to want to use it. So reach out to us, talk to us. We'd love to show it to you. Hope you guys have a great weekend. We will talk to you on Monday.